Welcome to the latest Motley Fool Scoreboard. I'm on in Balloon. We've got longtime fools, Travis Hoium and Jose Najarro, giving a 1 to 10 rating to maybe the most talked about stock this past year. It's Nvidia, ticker symbol NVDA. Talk about the business first, including factors like industry and all that competition. A 10 is invincible, a 1 is hopeless. Travis is at an 8. Jose follows the stock very closely and is super bullish. He's giving a 9.
Yeah, so I mean, for Nvidia, I don't think I can ever give it a perfect 10. We've seen AI come in out of nowhere. And with AI innovations, I do believe it can create a lot of unknowns and uncertainty about one, demand, but more importantly, about competition and optimizations of AI solutions. So that's the only reason I did not give this stock as 10, because as tech continues to innovate, we don't know what's going to go on from here.
Yeah, and I went with an 8 just because I'm going to take 2 points away because NVIDIA at this point, and this has only been true for a couple of years, is basically 100% reliant on AI, at least as far as the market is concerned. So if AI disappoints in any way, whether that's demand going down or margins going down, and it hasn't yet, but the business is going to struggle and therefore the stock is going to struggle if any of that comes to pass.
You know, I said Jose was super bullish. I should have said super early in covering the space. And we'll see if he's super bullish when we get to the actual stock return section. Let's talk about management now. A 10 is Warren Buffett. A 1 is Homer Simpson. Travis is at a 10. Spoiler alert. Jose, you're at a 9.
Yeah, I mean, their CEO is amazing. And I mean, he talks a lot about his work ethics and kind of the excitement he brings to his employees. My only one complaint about management is right now they're sitting in a lot of free cash flow. They're sitting in a huge amount of cash, and we'll probably talk about that in financials later on. But I feel like the management on handling that cash and buying back a lot of shares is just an excuse to use that money. And I feel like if they were a little bit stricter on how they were using that cash on buybacks, then maybe I would have given it a 10. But I just wish they were a little bit more careful with how they were spending some of the money on buybacks.
Anyone that can wear a leather jacket every day and has a penchant for high-end single malt scotch has got to be a 10. But seriously, Jensen Huang has been a visionary for 30 years. Yes, I don't disagree with what Jose is saying about they could maybe use their cash a little bit better, but he's a legend in Silicon Valley, and he continues to be extremely paranoid, which is actually one of his huge strengths. That's how he keeps the company on top. And so I don't know who would be higher on the list than Jensen Huang.
You know, today I learned from Travis that all I need is a Fonzie jacket and a country club drinking problem, and I am a fabulous CEO one day.
You're so close.
Let's talk about financials. A 10 is a fortress. A 1 is yikes. I don't know if we've ever had this. Maybe we have, but both of you are at a 10, Jose.
Yeah, so 10. I mean, the company most recent earnings reported $42 billion in cash and less than $8 billion in debt. This is also has jumped from the Max 7. It's now the number 3 free cash flow machine. There's only 2 players ahead of it. And I'm going to make a bold statement here that by the end of this fiscal year, it's going to jump to either number 1 or number 2. And I'm pretty hopeful for number 1.
Yeah, today this is a 10, but I do want to highlight that the growth rate is slowing, still growing. I want to make that clear, but the rate of growth is not over 200% anymore. 78%, I think it was, is in the most recent quarter. So that rate of growth is slowing. The next leg to fall is going to be margins. I think that's probably going to happen over the next couple of years. TSMC is raising their prices. You're also having much more competition come into the space. Maybe that competition isn't exactly as performant as Nvidia, but it is going to force those margins down from record highs. So 10 today, because if you look back at the financials, I think it's hard to find anything that is like you could criticize at all. But looking forward, things may not look quite as good. So I want to be a little bit cautious there.
Let's see how much of a foreshadow that was from Travis. Let's talk about the valuation. Travis, how well will NVIDIA's stock do over the next 5 years? And how safe is it? A 10 is a sure thing. A 1 is a lottery ticket.
I'm maybe going out on the limb here, and I know that I'm somebody who I like to challenge Jose on some of these, but I think the stock is going to return less than 0%. Yes, less than 0 over the next 5 years. And the big reason why is that so much growth is already priced in for NVIDIA. Even today, they're trading for 22 times sales. Their PE multiple doesn't actually look that bad on a forward basis. But like I mentioned, you could just have margin compression. You can also have multiple compression, meaning the price to sales multiple in particular comes down over the next 5 years. I think both of those things are going to happen. Add in the fact that that growth rate is starting to slow. Their perfection is priced into the stock. One of the reasons it's down so far in 2025 is maybe that perfection isn't quite what's going to be reality. So a lot of things that could hurt the company. Keep in mind, the price to sales multiple alone, the expansion of that multiple would have beaten the market over the last 10 years. That's not sustainable. If we go in the opposite direction, the stock will suffer. And that's why I give a safety score of 4 as well.
Yeah, I think Travis is just really trying to make me cry by the end of this episode. But for me, I'm going to give it a 5-year return of around 10 to 15. I believe that it could, and this is very crucial, it could double in 5 years. Yes, I know $6 trillion sound insane, but I'm going to say that it's all dependent. And I think Travis brought a good point. Slow is growing down. And I think it's all dependent on AI innovations. Right now, we have good colors that there could be new market opportunities from automotive AI, from autonomous robotics, from AI agentics. So if all these AI innovations do continue to progress, I believe this could double. Now, it's weird because the safety score I'm going to give it is 5. And I'm going to say I put it as a 5 as I feel like it's somewhat of a coin flip, where if AI innovations continue to progress, I see a good future. If AI innovation stalls, then it could definitely go the other way and look pretty bad.
It's time for everyone's favorite topic. This will be interesting. Travis, is there a company in Nvidia space that you like better?
What is the one company that Nvidia is dependent on? That is TSMC. It's the one company that can raise their prices, actually hurt Nvidia's margins. So I think they're in a phenomenal position. Nobody can match them in the fab space right now. So that's what I think is a better stock.
And for me, better in the AI space, I'm going to say no. But if I was looking for a more attractive semiconductor stock, not completely dependent on AI innovations, I would choose AMD.
More great foreshadowing. The next 2 companies we're going to do in Scoreboard are AMD and Taiwan Semi. Thank you to both. And it'll be Travis and Jose. Thank you to both of them. They've given NVIDIA a strong overall score of 7.4 out of 10. Even with Travis tanking the returns expectations and both panelists rating it low on safety. That's pretty tremendous. Look out for a new Scoreboard every market day at 7 p.m. Eastern. Next up is AMD. Till then, Fool on. Calling NVIDIA is like a basketball commentator calling Steph Curry Stephen Curry. You immediately lose all credibility in my mind.